Hello, my name is Gerald, and I appreciate you showing up today for my first investment pick video. I want to start off by saying that nothing in this video or on my channel should be taken as financial advice. I'm not giving financial advice. I'm simply letting you know what I am investing in, and I'm not making any kind of recommendation as to what you should be investing in. Videos such as this will be uncommon, as I do not often change my investment strategy. I generally stick to index funds, as investing in individual stocks is quite risky. Alright, so they say that the cure for low oil prices is low oil prices, and that's at the heart of the investment that I'm making. So the reason this holds true is because, well, first of all, fracking companies need oil to be a certain price in order to make a profit. So when oil falls below a certain price, you start to see these fracking companies go out of business or go bankrupt. And it really varies depending on the source of the oil. Like some fracking companies need the price to be above $40 per barrel. Some need it to be above 60. Some even maybe need it to be above 90 in order to make a profit. And I have heard that it could be as low as $30 per barrel. So right now it's at $40 per barrel, which means there are some fracking companies that are not making a profit. And so if the levels stay low like this, they likely will go out of business. And so when they go out of business, that means there's less supply, and so that's going to drive prices up. And part of the reason that the oil prices are so low right now is because of COVID. Could also be partially because of OPEC and the disagreements that they've had. But that doesn't really matter. You don't need to know why it's low. All we need to know is that it's low right now. And so what do we know? That when oil prices are low, what happens to stocks such as Chevron? CVX is Chevron. And as you can see over the last year, we've had an almost 40% drop, a 37.88% drop in Chevron stock. And this is the result of just decreased oil demand that has resulted in a decreased price of oil. So logically, you would think, okay, as oil prices start to go up, Chevron stock will go back up. And we know that it will go back up because demand for oil is not going to disappear. Once COVID is all sorted out, we'll go back to consuming oil at previous levels. We likely won't see these ridiculous levels, the $73 per barrel of crude oil. We likely won't see those prices again in the next 2 years. But I believe that within the next 2 years, we'll see significantly higher prices, which will drive Chevron stock up. And then I'll be able to sell at a profit of 20 to 40% is what I'm hoping for within the next 2 years. So we'll see what happens with that. I'm going to try not to get too greedy with it. I'm going to try to just make a good profit and get out. And I'm going to set price points for myself for where I want to sell it. You should always do that. If you're making an investment on an individual stock, especially something that you're not planning on holding for the next 10 years or more, you should figure out an exit point for yourself. I haven't determined that for myself yet, but I'm thinking it's going to be around 20%. When I make 20%, I'll probably sell some of it or all of it, and then definitely selling all of it by the time I make 40%, which would bring us back above the level of Chevron stock 1 year ago. And you can see it even got up to like 130. So this is just very cheap for Chevron. But that's not what matters. What matters is that the reason it's low is because oil is low. The barrels of crude oil, they're a lot cheaper than they were. So Chevron's stock slid, as you might imagine. And because there's less demand for oil, of course their profits are going to be lower because their profits are reliant on oil sales, which that makes sense as well. So that's the move that I'm making right now. And what I've been doing is I've been putting small amounts in, just here and there, ever since we got around to that $70 level. And I've been purchasing more as, like today, the stock went down 2%, Chevron on the day. Yeah, 2.35%. So near the end of the day, I decided to buy a little bit more of it, and I'll continue to do that until Chevron stock starts to go up significantly, and then I'll stop purchasing more and just hold on to it and wait for that 20% increase in my investment mark, and then I'll sell. So yeah, I mean, this is pretty foolproof. My father actually turned me on to this. He's made this play a couple times historically, and he did very well on it. He's like me. He doesn't like to take on too much risk, so he sold off earlier than he probably should have. But you never know what's going to happen. Just get a good return and then bail out and just be happy with that. Like, even if you can get like a 10% return in less than a year, I mean, that's awesome. But we're looking for 20 to 40%. And like I said, this might not be a good investment for you. I'm not giving you financial advice. Also, never put more than 10% of your savings or your portfolio value, or however you look at it, into individual stock, just because it's extremely risky to do that. Like, you should definitely have a good amount in savings if you're going to begin investing in individual stocks, even though this is a safe play, because we do know that oil prices are going to go back up. All right, guys, I just wanted to share with you what I'm doing. It's just a logical play. It's a low risk, logical play, but it could go bad. I don't really see how, but it could. It would have to be something really, a radical change in our economy and the way that we consume crude oil in order for this trade to go poorly. It could also take more than 2 years before I can sell it. If for some reason COVID just doesn't go away, we don't get a vaccine for many, many years for whatever reason, and it continues to be a problem, and people continue to not fly and to not drive their cars as much because there's less places to go because of all the restrictions on what you can do right now. But regardless, I don't know. It's a safe play. Let me know what you guys think of it. If you guys do think this is a good investment and you agree that oil, that the best solution for low oil prices, or the best cure for low oil prices, is low oil prices, click that like button. If you disagree and you think that over the next couple years we're going to transition in such a huge way away from crude oil, that it'll never recover and we'll never see the pre-COVID demand for oil that we saw, then click that dislike button. Let's see which opinion is more commonly held. It'll be interesting. Well, guys, honestly, thanks for showing up. I'll see you on Sunday for the continuation of my series that I've been starting this channel with. And yeah. All right, there's one other thing that I wanted to note. So the reason that I'm investing in Chevron instead of a smaller petroleum company that I could potentially get larger gains with, a company that has slid more, is because Chevron is just a Goliath. They're not going anywhere. They're too big to fail. Nothing's going to happen to them. Like, they're never going to go out of business. It's just not going to happen. And if it does happen, it's going to take many, many years. So my investment is relatively safe. Whereas if you were to invest in a smaller petroleum or oil company, then your risk is just a lot greater, because there is a chance that if things get too bad that they'll go bankrupt, or they'll have to like close a lot of their facilities or something like that. That's not going to happen to Chevron. Sure, they're laying off a lot of people right now, but Chevron's always going to be Chevron. They're always going to be this Goliath in the industry. So that makes it even less risky. So if you really did want to take a chance, and like I said, this is not financial advice. If you wanted to see higher returns, if you're one of those people that isn't as risk adverse as I am, yeah, go for one of those smaller companies and make bank or lose it all, right? But I'm not willing to take on that risk, and that's why I chose a large company like Chevron. And it might not even be the best large company to make this play with. So if you were going to invest based on low oil prices, you would want to look into each company yourself, concentrating on the larger ones if you want to decrease risk, concentrating on the smaller ones if you want to maximize profit. And I just figured I better note that. All right. Bye, guys.